stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Well, we have a couple of A-plus stocks that we want you to hear about this time around. At least they both start with the letter A. Our strategists Kevin Cook with me here at the desk and Dave Boren joining us on Skype are going to present them to you. Dave, we're going to start with you. You are going to talk about Alphabet.
I am, Terry. So generally for top stocks, I try to pick something that's one of our top ranked stocks, but that maybe our listeners don't know about or haven't heard about. So it's interesting. I'm going in a different direction today because I'm picking Alphabet, which is, of course, the parent company of Google. Not only has everyone heard of this, I'm guessing that pretty much everyone listening right now is using a Google product as we speak, or possibly multiple Google products today. So Google split their business. It's 4 years ago this month. That's the anniversary of when they became Alphabet. And they split into Google, their core business, which is, of course, the industry leader in search and online advertising. And then they call the other division Other Bets. And they're in all sorts of businesses: autonomous driving, fiber optic technology, cloud computing, healthcare solutions, and then things in their R&D lab, things as far-fetched as using hot air balloons to provide internet service to far-flung areas of the world. So it's an easy business to understand, and they're in all sorts of other businesses that affect all parts of our lives. My daughter uses a Google Chromebook for virtually everything she does in high school. She took the PSATs on a Google Chromebook last week. Moonshot is a division of theirs that does the really, really far-fetched stuff. But Google has such tremendous revenues and earnings that they can afford to experiment in things like that because their core business is so strong. They're going to earn $49 this year a share. They're going to earn $56 a share next year. Estimates have been going up lately. It's a Zacks ranked #1 right now. Now, the share price might scare some people away. It's $1,240 right now. But if you think about that in the context of $56 of forward earnings, the PE is only 25 on a forward basis. So it's a little higher than the S&P, but for a company that grows revenues at 20+% a year and earnings in the teens every year, that's actually very inexpensive. So again, it's not an interesting story. It's not anything anyone hasn't heard of before, but Google's a real sure bet right now.
All right, Dave, thanks for that. Kevin, you have a company called Alteryx. It's a self-service data analytics software platform?
Yes, one of my favorite software companies, small software companies. This is the era of big data, where corporations are just flooded in all kinds of data. They're collecting it whether they want to or not. It gets stored on servers, so log file data, just about everything that the internet generates ends up on a server somewhere.
Sure.
And they call it dark data because it's unknown. It's like this. It's like the sea. You have to explore the sea. You have to go under the sea, so to speak, to find out what's in the data. What can we do with it? We know that customers are interacting with us in these ways. What more are they doing? What can the data tell us? So Alteryx is, you can think of it as an engine. You called it self-service. That's kind of what it is. A corporation buys the engine, and then they can mine and model their own data. And I say it's one of my favorite software companies, just to let you know, we bought it in May in the 80s, traded it up to 130 for over 50% gains. And now we're buying again in the 90s. So let me show you a few things. First of all, on my screen here on Zacks.com, you see that I wrote a Bull of the Day article on Alteryx. October 11th, I published that. And I've written many articles about Alteryx. I've done many videos, but this is the most recent thing. You can get a nice update, and it's got links in it to some different videos I've done. So just come to Zacks.com, type in AYX, and then look in the news, and you'll see my picture next to a picture, Bull of the Day, October 11th. So that's a good place to start. Let's look at their website real quick, just so you're familiar with it if you want to learn more, Alteryx.com. And a lot of people want to pronounce it Alteryx,
yes,
but it is the word alter, and that's the way they think of things, so that's why they say alter the way you feel about analytics. So let's look at who some of their customers are. Unilever, Audi, Barclays, Pfizer, Dell, Fortune 1000 companies that need to mine and model their data. All right, let's go to the estimates and see what the growth is like. So on the Zacks detailed estimates page, $6 billion company, estimates are they're going to do $500 million in sales next year. So that's 12 times sales, relatively expensive, but not like some of the software high flyers that are trading for 20 times sales. Even Salesforce trades for 7 times sales. So let's look here at the detailed estimates. This growth has just been fantastic this year. They're going to do $375 million in sales. That's 83% growth. That's how this product is launched. And even next year, so if we get to $500 million, that'll be over 32% growth. And they've launched into profitability too, as you can see here. If they do 48 cents this year, EPS, that's 2,500% growth over barely break even, and projected to keep going at over 50% growth next year. We talk about the valuation in software and how far this can go. I mean, this kind of growth is what you pay 10 times, 15 times sales for. So if they can continue to do that, this is the pace that you want to see in software. In software, they talk about the rule of 40. If your sales growth and some form of earnings, whether it's EBITDA or whatever, are over 40, 50%, then you can command a high multiple that just keeps growing. So take a look at Alteryx. I want people to go check out my article, get more information. And I think it's a buy here in the low 90s. And this could be a $125 stock by Q1 of next year.
Might say they maintain the altar of big data.
Exactly.
Do you own either of these two companies?
I own Alteryx for the Taser Trader portfolio.
And Dave, what about you? Do you own either of these two companies?
I don't, but I think it's fair to point out that just by virtue of its market cap, virtually everyone owns Google in some form or another. If you own a broad-based ETF, you own a big chunk of Google.
Okay. Well, thank you both for the input. And don't forget, always more stock information on our website, Zacks.com. You can get over to the homepage and check it all out from there. And here's something new that you may want to consider. For a limited time, you're invited to follow Market Insights buys and sells from all of our recommendation portfolios in real time. And you know what the best part is? It only costs $1. And you can even look into services that are exclusive, and those that, because they're exclusive, have been closed to new investors. All you need to do to get access to this for $1 is just visit Zacks.com/promo for more details. In the meantime, with Kevin Cook and Dave Bourne, I'm Terry Ruffalo.